what you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
All right, welcome back to The Last Trade. Tim, we got Tim Kotzman, Brian Cabellis, and Michael Tanguma. Tim, I really like the portrait that you have in your background. It's very regal looking. It's a new landscape, a new background for the show.
I'm just trying to be on theme that it's a golden age for America. That's all, right?
The Sound Money podcast with Sound Money aesthetics.
That's right.
I love it. Well, I got some work to do, but at least I'm not in an empty room anymore like I was 6 months ago. But let's pull up the price here. Tim, it's also a happy early birthday to you.
Oh,
I think
yeah.
when we record when we publish this tomorrow, it'll be your birthday. So how are you feeling on your birthday, Tim?
Thank you. I got an extra long orange tie on today to celebrate my birthday. So, it's
that is irresponsibly long, Tim.
It's irresponsibly long, and we're going to the moon. I'm going to meet Michael on Mars. We're going to have a coffee. It's going to be great.
We're only 3 months away. We're only 3 months away from that being like memed of who can be more irresponsibly long when it comes to the tie. By the Bitcoin conference, it's just going to be like a draping like on the floor. Yeah.
Dragging it on the floor behind you.
Oh God, we took a nice little dip here.
Yeah,
we're
so
kind of diving.
We're looking at the price for those who are just joining on audio. We're looking at the price on the on-ramp terminal, on-chain, market research, free for you all to use, so check it out if you'd like. But we're looking at a price of about $80,000 per Bitcoin. We've had an interesting week since we recorded last Wednesday or Thursday with Lee Bratcher from the Texas Blockchain Council. We saw the executive order be passed by Trump, and we're going to get more into that. But what do you guys make of the price action of the past week? I thought we had recovered a bit. We did yesterday, I guess, right? We were coming back from a trough of around like 76, 77, but it looks like things are back on the way down. What do you make of this, Mr. Brian Cabellis? House view?
House view, short-term noise. None of this matters. I don't really care that we're at 80. This is cheap sats for those who are on zero. Good time to buy. Bitcoin is still largely conflated as a risk-on asset by most traders. So whether that's hedge funds or people just thinking short-term and not accumulating for the long term. And so it gets wrapped up in the broader macro turbulence, whether that's the sort of tariff wars going on right now, equities selling off, general uncertainty in markets that is leading to more of a risk-off sentiment than we've seen really, over the past year or so. Things have been up and to the right for most asset classes up until the past, month or so. And so I think that's really all this is. It's Bitcoin is continuing to be wrapped up in a broader view that it is, a tech speculation. I think that narrative is going to slowly transition over time. I just think we're in the early innings of that occurring. And, I think what we'll get to around the SBR is an important signal that will help swing the pendulum to the other side of that and open people's eyes to the risk-off nature of Bitcoin at its core in terms of its monetary properties and what it can do over the long term, if you are willing to and able to ignore the near-term volatility that we're seeing right now.
I agree. Yeah, this podcast is a blessing and a curse. It's a blessing because I get to see Tim's tie grow week after week, but it's a curse because we have to talk about the weekly price move on the Bitcoin price. I agree with you. It is noisy. One of the stats that I saw that indicates the noise and kind of the misunderstanding or lack of understanding from the investors around Bitcoin and the value proposition is that since February 10th, so about a month ago, there's been $5.2 billion of outflows from the Bitcoin ETFs. So I think a lot of this is from hedge funds and more short-term bias toward the asset class. But I think it's also just retail investors who are getting their first taste of Bitcoin volatility, because the ETFs have only existed now for a little over 12 months. And so a lot of that demand is from the retail investor base. 80% of the ownership is still roughly retail. So I think it is noisy. It feels incredibly mispriced just given the news of last week and where this all goes. But Michael, curious to hear what your thoughts are.
I think what Brian shared spot on. I mean, the reality is it's a small asset in a large pool of assets. So when liquidity starts to dry up or deleveraging, it's an easy thing to sell. The main thing that comes to mind is just this notion of like, I think we just generally estimate or assume that everyone is at the level of understanding of long-term asset store of value. And to Brian's point, like we're on our way there, but this is still a risk asset. I would say it's still a trade for a lot of people outside of a traditional trade. Like for this middle tier of like what we think of as a knowledgeable Bitcoiner, there's still a thought of like, I have a price point, I have a house I want to trade it for, and that's what money's for. But I still think it's not like this asset that is just understood that I will sweep excess capital, excess productivity for my future generations, right? And like that will grow over time, but if it's not there, then ultimately it's going to be one of the first things that are sold because it's hyper liquid when risk goes on, because you have other dollar denominated obligations that you have to manage and deal with. And so I think it makes complete sense. I also think like I haven't looked at like the VIX and the volatility, but like this is the most volatile I've seen Bitcoin in probably for a long time, maybe since I've been around in the space, because it's been volatile, but not like this, like going and doing the 10% swings back and forth, at least for the past 5 years. So I do think this is a symptom, or it's just like a proxy for what's happening in the global markets. And it's just kind of the first thing to bounce either direction based on whatever signals are coming.
Yeah, the volatility that you mentioned, Michael, is not isolated to Bitcoin either. This week alone, there was almost $3 trillion wiped out from the Mag 7. And so a lot of investors still perceive Bitcoin to be risky or highly volatile, which it is. But volatility, A, isn't inherently bad. And B, I think investors forget that the Mag 7, which is about 30% of the S&P 500 in terms of market cap, and certainly drives most of the returns, these are very highly volatile stocks as well. Like there are 10, 20, 30% drawdowns quite frequently, actually.
One additional one to contextualize that we brought up on Final Settlement, Jackson, I think you'll appreciate is, I think it was like last 7 to 10 days, NVIDIA wiped off $1 trillion in its market cap. The whole bailout in 2008-9 was $700 billion.
Which is wild. And so what this amounts to then, I think, is we're still in the early stages, to your point, Michael, because most investors perceive this to be a trade, or it's part of their, it's a 1% to 3% allocation of their portfolio. What most investors are still missing is that Bitcoin and every other asset class, for that matter, is a proxy for global liquidity. It doesn't mean that Bitcoin's price only moves on liquidity, but at the most fundamental basis, you don't protect your wealth in dollars because over time they devalue. So naturally you allocate to investments such as equities or real estate or Bitcoin. And the sooner investors realize that liquidity and these macro forces of debt, deficit spending, M2, which is money supply growth, are driving asset classes across the board, the sooner we see Bitcoin take off from a $2 trillion asset class to a $5 or $10 trillion investment.
Yeah, that's just, yeah.
It's exactly right. I mean, it ultimately comes down to, what you're describing is scarcity, effectively. Like why is real estate valuable? Why are equities valuable? The best companies in the world, there's only a handful of them. They have moats. They have competitive advantages. Similar dynamics with real estate. Bitcoin is different and special because it's this perfectly scarce asset, and therefore, that combined with it being small relative to everything else, like you said, Michael, makes it the fastest horse off the bottom. So like whenever, and I think we're already seeing global liquidity sort of bottom and return back upwards, and there's some amount of lag in terms of when you see Bitcoin and other assets move in response to that. But typically Bitcoin is the fastest horse out of that because it is, in my mind, like it's the purest form, it's the purest expression of what we're describing around these scarcity dynamics. And so, yeah, it's a matter of time. It's, I think if you're looking at everything this administration is doing, I think it's pretty apparent that, whether you want to call it purposeful, they effectively don't, Trump has said he doesn't care. He's not looking at the stock market. He's okay with it going down, effectively because he wants to bring down interest rates. He wants to force Powell's hand in some manner, insofar as they don't have to roll over all this debt at where interest rates are today. And so I think that's also part of what's going on here. And so, again, long-term perspective, if you can look past sort of this, initial period, Bitcoin will be the fastest horse outside, once we're outside of that and global liquidity returns, because they're going to have to print regardless, as we know, in order to service the debt levels, regardless of what Doge does, or regardless of if they're able to, keep a lid on inflation to some extent by reducing energy costs, which we've seen some headway in the past couple of weeks. Ultimately, the end state is more printing, and therefore you want to own scarce assets, and Bitcoin is the most scarce asset.
Yeah, like somebody has to blink first, but we're in a deep, deep recession. I didn't realize like how bad it was until, because we kind of live in a bubble, and if you have a bunch of friends and family members that have protected their wealth in Bitcoin, you don't feel it as much. But when you go out and talk to people in retail and the things that are happening, and you can see like anecdotes on Twitter, it's just really, really messy out there, from shortage, a reduction in hours for people in the retail space, to the things that are on like being left on the shelf. To I had heard an anecdote of a retailer that had to create like basically a sub brand, like that was the cost was 50% reduced just to be able to sell to a market segment, because they can't afford that. Like, it's just really bad. So there's the rolling over the debt and having to reduce interest rates to be able to pay for that. But then there's just a natural like societal factor that plays into this, for people not being able to make ends meet and all the things associated with it, that the liquidity has to return, or you just end up in like chaos.
I would also say I think like we've been there for a while. Like, I don't think that that's a recent phenomenon. I think towards probably the back half of the Biden administration, there were similar anecdotes. I think to some extent, at least if you're defining a recession as a decline in GDP growth, I think to some extent you could argue that was effectively papered over by government spending and government jobs, effectively. So influencing those government issued statistics via effectively propping it up and papering over that. So I think what you're seeing now is, as you strip out a lot of that excess spending and waste, I think we're starting to see the reality of what's really going on. But to your point, Michael, like, I think when you go out and talk to people, people are struggling out there, whether it's, people in the retail space running a business, or just people, living paycheck to paycheck. I think we're just starting to see it more now.
To tie it back to Tim's painting in the background, one of the stated objectives of the Trump administration is to have a golden age in America. And so I do think that ties into the strategic Bitcoin reserve, the executive order that was issued on Thursday, March 6th, I believe, last week. And so this actually, there's a lot to talk about. One thing I want to touch on, just for audience investors to think about, is Bitcoin and all these investments that we discussed, all traditional asset classes, they move with liquidity because they're effectively proxies or store of values to protect against the debasement of fiat currencies. Where Bitcoin goes longer term, where the first 15 years were defined by the expansion of the money supply, the post-Great Financial Crisis QE environment. Where this goes the next 15 years is you have sovereign nations allocating to Bitcoin as part of their strategic reserve. And these are going to be pools of capital that are far less sensitive to the volatility and short-term distractions and noise that exist and impact impact retail investors, which have largely driven the ownership and allocation toward Bitcoin. So let's talk about the strategic Bitcoin reserve. I think there's plenty to cover. I first maybe want to just get your thoughts from the group in terms of, was this kind of what you expected? There was a lot of flip-flop over the past couple weeks and months about Bitcoin only. Is it going to be other crypto assets? And what we saw now is the Bitcoin strategic reserve and then the digital asset stockpile. Is this in line with what you guys thought, or is it different?
To me, it honestly exceeded my expectations from like a Bitcoiner perspective. I think, as you alluded to, it was not clear what this was going to look like in the weeks and months leading up to it. There was talk about it, there was posturing about it, but it wasn't clear what it would actually look like. And there's a few key takeaways in my mind. One is the real clear delineation between Bitcoin and the other crypto assets. And so there's two different facilities. There's the Bitcoin Strategic Reserve and there's the digital asset stockpile. The Bitcoin Reserve, we're going to hold our Bitcoins. We're going to figure out how many Bitcoins we have. We're going to do an audit, and we're going to look for ways to acquire more Bitcoins in a budget neutral way. The stockpile, on the other hand, we're saying we'll likely hold these. We're definitely not buying more, and we might sell these other crypto assets if it behooves us. And so that's a real clear sort of line in the sand in my mind, and important signal from this administration saying, we understand Bitcoin is different. It's special. Sachs had commentary around this afterwards, highlighting, there's no issuer. That's a very, there's a ton of reasons why Bitcoin is different than the broader crypto space. But if you want to just have a very clean cut, concise message, it's the only one without an issuer. And so it does have, basically more credible neutrality and actual decentralization relative to these other assets. And therefore, it makes sense as a strategic reserve asset, where these other assets, they're specifically not calling them a reserve. It's a stockpile. So we just happen to have these other assets. We're not thinking about them long term like we are with Bitcoin. So that was one of the biggest takeaways for me. I found it curious how like some quote unquote Bitcoiners perceived this as like not great. One, from a couple different perspectives. One being like, I think there was a sort of delusional assumption that they would just be smash buying Bitcoin immediately. And that obviously didn't happen. But even beyond that, I think there's some sentiment that like, this wasn't the purpose of Bitcoin. How could you be cheering on the US government embracing Bitcoin? And I think that's just completely misguided in terms of a line of thinking, because like, how did you think that this was going to play out? Like, if Bitcoin is to be global money, governments are going to adopt it, whether you like it or not. And, Bitcoin will never become global money if it's just a group of anarchist cypherpunks on the internet using it. And so this was always going to be the path. I think we're on an accelerated path. You could certainly make that argument. I personally didn't expect the US government to come out and embrace Bitcoin like this quickly. But I think this was always going to be an inevitability. And so I struggle with folks who are perceiving this as somehow bad or bad for Bitcoin.
Yeah, and one thing too is just things move so quickly in this space where I think we almost have to just take a step back and think about a couple of years ago. Certainly when we all entered the space, there was some sort of lingering concern about, will the government ban it? Or if they could ban it, what are the implications of that? Because we all know how bans have happened in China and has been ineffective. But there was this overarching concern, or at least thoughtfulness, around how do you protect yourself against a government that may take a draconian response toward a form of money that's competing potentially against their interests. What I think is remarkable is now we have the US government embracing Bitcoin and then also recognizing Bitcoin and stablecoins as a way to strengthen the US dollar. And so that is something that I easily overlook, but it's just incredible how quickly we got to that point, where whether it was 4 years ago, 5, 8 years ago, the narrative, the discussion was totally different. And now, Brian, I wasn't like you. I didn't necessarily think this was inevitable. Maybe just for whatever reason, I didn't think it was inevitable. But anyways, to be here now, it's incredibly exciting. And this is an incredible milestone. Yeah, Michael, what'd you say?
Well, so I was going to touch on both of what you guys shared in the sense of there's a few things. One is like the economic reality. There is what exists in the sense of like, I just always anchor back, do you want to make money or do you want to be right? Because being right is the romanticized nature of what Brian was referencing around we're all going to hold these keys in our house and the government's never going to adopt it, and whatever like version that somebody had in their mind. And it's generally like we've been talking about a lot internally, this notion of like most people don't remember a conversation they have or a concert. It goes back to like when you interview somebody in the first 30 seconds, you make the conclusion on if you like them or not, and the rest is spent validating it. It's like somebody came into Bitcoin and had this idea, and then it was very hard for most, because most people either aren't critically thinking or thinking objectively and for themselves to understand the economic reality of how this will actually play out. And anybody that has done that obviously knows all the liquidity sits at sovereigns, family offices, people that manage the world's capital. And if they're going to come in, then they're going to come in. That's the only way that this thing can win is money. And we obviously spent a lot of time on that on the other side. And Jackson loves talking about like, it's a really good mental model or paradox that like people that will scream self-custody ties into like you're actually putting people into an ETF because you're selling this version of the future that is not actually based in economic reality, because most people do not want to manage all of their wealth on their person and deal with it. And so that's just a reality of that. Tying back to your point, Jackson, like we are so kind of like messed up in our brains when it comes to the serotonin and dopamine levels of like Twitter and Bitcoin are kind of like the same proxies. Like they're so reactive to the market that we just want to see the vol. Like we just want to see things happen. We want to see the announcements. We want to see the price move. And the reality is, like, to your point, this is the great, like taking a step back from the minutia of the mechanics of what's there, because I think it could possibly change, specifically if there's like actual legislation outside of the executive order. The simple fact is that you have the president of the leading nation in the world not only talking about it favorably, because the alternative was what had existed the past 5+ years is the pure just like stigma.
It's
and
a scam, literally calling it a scam and a Ponzi.
Well, so scam in that, but then the radioactive nature that it would be banned, because that's where this has been a complete 180 shift from the institutions, the RAs, and folks we're talking to. Because now if the government comes in, and this ties in, you can't talk about this without the OCC, because the OCC is leading from the administration side and the pressure there. And we talked about this again earlier this week, but Jackson, you know this well, like high net worths, family offices, institutions don't want to catch a falling knife. They rather pick up the asset on the way back. It's very similar with dealing with the banks. Like catching the falling knife coming into this space is going to Coinbase and Binance and all these third-party exchange. Catching it on the upswing is just going to your bank when they've already approved it and then just buying it out of your account, because now you're just like, you're preserving your wealth. You're not going to just have it evaporate because the government banned it. So there's a lot embedded in this this notion of independent of strategic reserve. Just saying that we're not going to go and take you and black bag you or try to kidnap you or try to take the asset, and then anything else is really gravy, and the sovereign level competition for the underlying is just part, again, of the economic reality. If there's only 21 million, it's naturally going to end up this way.
Yeah. What's the saying? History doesn't repeat, but it rhymes. I published something on my personal newsletter last week where I'd categorize what we're seeing now with Bitcoin within the United States very similar to be what happened in the mid-1800s with the gold rush. So in quick background, in 1848, when gold was discovered in California, there was a lot of skepticism. And so there were communities within the surrounding areas that recognize that there actually was gold here, but this is a precious metal, and of course there's going to be doubts that there could actually be significant amounts of this precious metals in the hills. And so naturally then there was skepticism around the country, around the world, and most of this stayed isolated, where I almost think of similar to Bitcoin, those who were early to adopt the asset class were in this bubble, and then there was always this skepticism that exists outside of that where, again, going back to that conversation, well, maybe the government will ban it, Who knows what will happen? The banks will never step in. Institutional investors won't touch it. So it existed within this little community, similar to what happened in the 1800s with the gold rush in California. But the critical thing, what happened later that year in 1848, was President James Polk delivered a State of the Union address in December of 1848. And he acknowledged a report about the discoveries of gold in California. And pretty much from that moment forward, there was widespread acknowledgement and belief, and they knew that there was gold in California. So what ensued in the following years was hundreds of thousands of people migrated to California, not only in the United States, but globally in search of discovering gold. And so what we've witnessed now in the past week is the Polk moment for Bitcoin, where you have this stamp of approval now from the Trump administration. They have the strategic Bitcoin reserve, and there's potentially ways now that they'll explore to acquire more of it. But this is really the signal to the rest of the world that we've given this the stamp of approval. Bitcoin's legitimate. We're going to acquire, or we're going to hold it at least, likely acquire more of it. And this is really setting off what will be the digital gold rush or the Bitcoin rush.
And maybe to give Tim his credit, he's been having some pretty bullish price predictions on Twitter. And part of this conversation really is all about the convergence of everyone realizing this is the thing that they want, right? From the sovereign level to the individual to the balance sheet. And we're kind of like seeing, you can squint, that people are coming around to that this thing has value, but not how much value and how much of their wealth needs to be in it. And it reminds me, Jackson, what you just shared of this chart. And this chart gets a lot of slack. I'm pulling up the Weimar Republic and the hyperinflation of the mark. The reason why I bring it up is because it's not to insinuate like that we end up in hyperinflation with the dollar in the traditional sense that you can't spend it and society breaks down. But there's that point where everyone realizes what Jackson was alluding to, and you kind of see that you don't see any more downwards pressure into selling, but versus the dollar, it just kind of rips. And I think that's ultimately what happens once people in real estate and all these, like everyone has this door they're trying to get through. And you can make the case that the dollar's hyperinflated against Bitcoin the past 15 years to go from effectively zero to, $80,000 or 108 at the height. That's insane when you think about it, at it from zero, monetizing in real time. And so I think like we're just on the precipice of the market understanding this, and whether it's in 24 months or 48 months, you'll see something like this relative to the dollar, and that'll be everyone understanding actually what is Bitcoin.
Yeah. And the implications of this as well for the country and for states for that matter, as well as those nations or states that lead within Bitcoin adoption are ultimately going to be the jurisdictions that accumulate the most wealth in the 21st century. It's like the same thing in the 1800s. Hundreds of thousands of people go to California to discover and extract gold out of the ground. People make incredible amounts of money from that. They build new businesses, new infrastructure. The same thing is going to happen. And that's why Trump and his administration wanted to campaign on being they say crypto president, but it really is Bitcoin president when you think about the implications of the strategic Bitcoin reserve and then the digital asset stockpile. So this is incredibly bullish for the asset class, but it's also really bullish for the country as well. I call it the orange age because you have Orange Man, and he is now a big proponent of the orange coin. So I don't think it's the golden age anymore. It's really the orange age of America.
Yeah, I would also say I think similar to what you both described, and Luke Groman has talked about this a bit, but I think everything they're doing is a signal to the average American that, one, we're not going to ban this. And so it gives the average person air cover and space and the ability to learn about Bitcoin and save in Bitcoin, and continue to spend dollars. And I think that's effectively what the plan is because I think they know internally, like, yeah, we're going to continue to debase the dollar. When we're sitting here 20 years from now, that trajectory of debasement is going to be unchanged, if not accelerated. And so this is giving the average person the out to save in Bitcoin and spend in dollars.
And what I think is great about this too as well, we talked about it a couple of weeks ago, but want to just highlight it again really quickly, is a lot of people won't adopt Bitcoin until it's incredibly easy for them to do so. And there's a lot of reasons for it. It's like people don't have time, people don't actually have a lot of money to put into it. Like we're, again, in this bubble. But if you move a little bit outside of that, it ties into what Michael mentioned. There will be a point in the future, I don't know when that happens, but people will be able to access Bitcoin directly through their traditional banking relationship. And so until that is widely accessible, most people still are not going to buy Bitcoin direct, hold it directly. If they're going to opt for any solution, and this maybe applies to the top 50% in the US, they're going to buy the ETF. And so why this is positive, why is it good that the US government and why is it good that the states are going to adopt Bitcoin? Because ultimately a lot of their constituents won't do it on their own terms. And this is a way for states, if they do it responsibly and they do it with the right intentions, they can actually use the adoption of Bitcoin to better the lives of their constituents.
Yeah, I mean, this all goes back to the ETF even being approved, and we've talked about it on previous shows where if you're running a country, your individuals, the constituents need to be able to spend. If you're going to onshore and you're going to produce things, they have to be able to they have to sell it to somebody, and so the individuals have to protect their wealth. Like it's very fundamental on why this is important for every country and specifically the U.S. And maybe this ties into like the sovereign game theory of, again, we don't get the serotonin or dopamine hit that another country just aped in and bought, 100,000 Bitcoin, not Bitcoins, by the way, Brian, but it's a different, it's not 100,000 golds. It's 100,000. It's a common thing, I think, in the industry is it Bitcoin or Bitcoins.
Playing with our Bitcoins.
But with the largest investment in a digital asset firm in the past history with the UAE MGX? GMX? MGX. So MGX target $100 billion for AI investments. It's not even digital asset related. But if you go back to just pure sovereign game theory playing out into wanting to be a leader in any industry and sector, the UAE has had a strong stance in leading in new emerging technology, specifically AI. But they've also behind the scenes have had partnerships with Mara and other miners. It's been rumored that they've been mining on their own via their own energy, via nuclear. We know Bhutan is mining. There's no shortage of countries that, you can make the case that's their first instance of like buying or getting Bitcoin exposure via their natural resources. Point being is to put $2 billion into one of the largest exchanges globally, that's their proxy for how do you start to buy the picks and shovels to get exposure to the space. And then shortly after that, it's come out that I guess Trump's team or network from his business side relations are actively looking at getting exposure to the Binance US arm. So this is happening in real time. It just takes time for people to like execute on a purchase when you think about consensus and just buying those size purchases. But it's playing out. It's playing out actively right now.
Bitcoin custody is evolving. And as institutional allocators increasingly look to incorporate digital sound money into their portfolios, risk management and operational excellence are paramount. Both self-custody and single third-party custody expose institutions to significant vulnerabilities. That's why OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to Bitcoin custody. With OnRamp, Bitcoin is secured in a segregated cold storage multi-sig vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Funds are fully auditable on-chain, cannot be rehypothecated, and can only move or be withdrawn at the explicit direction of the end client. Multi-institution custody removes the operational and technical burdens of private key management, providing an institutional-grade custody solution that meets the stringent demands of family offices, RIAs, endowments, and pension funds. We recently launched OnRamp Institutional, a dedicated segment of the business designed to provide secure, innovative Bitcoin custody and advisory solutions for institutions worldwide, providing allocators with robust security without compromising on accessibility, and allowing them to tap into a comprehensive suite of financial services from trading to lending and more, all built to institutional standards. Discover how OnRamp Institutional can elevate your firm's Bitcoin strategy. Schedule a consultation with our team to learn more at onrampbitcoin.com.
Yeah, I would love to hear Brian and Tim, from you guys. You were at the Bitcoin for America, what'd you call it, event or conference? Oh, it wouldn't be a conference.
Summit?
Bitcoin
like a
for
summit.
America Summit. I like that. You guys were there earlier this week. It was an invite-only event, so I guess it was quite intimate. Wanted to get your guys' thoughts just in terms of the discussions that were had, the people you spoke to. What was the sentiment like coming off the Strategic Bitcoin Reserve Executive Order?
I think you saw quite a few things. I'll hit on one or two at this Bitcoin for America forum. One, you had both the House and the Senate either introduce or reintroduce legislation with 6 co-sponsors each. But almost more telling, it's the first time that we saw Michael Saylor do a presentation talking about the aspect of Bitcoin being a defense system for the country, which kind of goes into soft war and Jason Lowery and that sort of a vein. So I thought that, along with a few of the other talks about bit bonds, about should the country look at self-custody or use custodians, how to buy Bitcoin in a responsible, market-neutral, market maker sort of way, capital market sort of conversations. I hadn't heard that before, so I thought that was very interesting. And then to kind of almost connected yesterday, sitting down with the president and CEO of Strategy, and him saying in the interview that when they first went to their accountants and attorneys for Strike, their preferred shares, they basically laughed at them. They're like, "You can't do that." They're like, "No, we can do this, and this is just the beginning." So you think about they can sell MSTR shares at the market. It's a $21 billion plan for each one of these, but let's use the 20 for round numbers. 20 billion in shares at the market, 20 billion in convertible debt, 20 billion in preferred shares. What if they come out with 1 or 2 other products? I mean, think about last fall. They raised almost 20 billion, somewhere between 15 and 20 billion in 40 days. So what if they raised 100 billion in 40 days? And what if several companies end up doing that eventually, and then you have nation states at play? So that's what the iteration and the game theory and these additional now on stage conversations is what I took away from it.
Yeah, echo all of that. Very very enthusiastic group. I would say probably 100, 150 people total. So it was pretty intimate. Industry leaders, politicians, legal folks, and shout out to the Bitcoin Policy Institute. It was a very high signal event. Great keynote speakers and some interesting discussions. Hard not to come away from that day being incredibly bullish, despite what, again, the near-term noise around the price movement has been. There was a palpable sense of, to quote the Don, of winning. This is what winning looks like. Having this forum in the nation's capital where there's tremendous bipartisan support for embracing this asset, and really, I think a big part of this and why Trump in particular and people surrounding him are so excited about it is because it's completely sort of the antithesis of what was the status quo around this asset in the industry, and reshoring a lot of the innovation. In the past few years, we saw great companies literally shut their doors in the United States because it was so hostile and adversarial. And so I think, that alone is a massively bullish and positive signal that people in the admin, people in DC understand that this is an area of innovation that we can't afford to just lose, and have, great companies and entrepreneurs and founders leave America because they don't feel safe operating here. And so I think, it was just great to see sort of this moment, particularly, right after the executive order from last week. There was just a sense of we are back on the right trajectory here. in terms of this country really being in support of the asset and the innovation that surrounds the industry. So overall, a great event. Sailor's talk was great. Vivek had some great comments around Bitcoin being the hurdle rate, which we at Early Riders have been reiterating for over a year. So nice to see that narrative is manifesting and permeating across various thought leaders. The BitBonds presentation was interesting as well. I think it's you're gonna start to see a number of sort of plans or suggestions around the clause in the executive order around budget neutral strategies. There's a number
Brian,
of things that we could do.
Could you also, before doing that, could you also just define what BitBonds are for people who might not be familiar?
Yeah, so basically, it's effectively creating new debt, but backing, in the proposal that Andrew Hones from New Market Capital was putting forth, I think it's 10% goes into Bitcoin. And so what that allows you to do is it allows you to lower the interest rate on the bond effectively. And so it in some of what he was presenting, a part of his argument and his thesis is like, if we issue a ton of BitBonds, this will be massively accretive to the United States balance sheet over the long term. And he had some projections around Bitcoin's price. And, if you are projecting, and you think Bitcoin's price is going to go up over the long term and you're backing government debt with the Bitcoin, there's a trajectory there that would allow you to offset a lot of the debt that we have. And so that was the core of his thesis, was we could basically, chop away at that 36 trillion in debt by issuing this new form of debt, which actually has a component that is going to appreciate over time as opposed to debase. And so that's at a high level, sort of the thinking around it. And it's not too dissimilar from what Saylor's doing, right? Like he's issuing debt that's backed by Bitcoin. So it's a similar concept, but it would just be, led by the U.S. government. Yeah.
I think it's fascinating, and it's not widely understood yet how Bitcoin could be accretive and offset the debt issue that we find ourselves in, because for a while there's been discussions of what is the productivity miracle that may get us out of this mess, and maybe it's the Bitcoin miracle, right? Because it's still a $2 trillion asset, and there's 900 trillion, probably quadrillion now at this point, of global wealth, and there's $37 trillion of U.S. debt. So it's not unreasonable to think that Bitcoin will grow from 2 trillion to 10 to 50 to 100 trillion dollars, and that might happen over a decade. It might happen over 2 decades, but that number will grow, even though the debt is increasing so rapidly and exponentially at the federal level post GFC. Bitcoin might actually grow faster, which is a wild thing to think about.
And that was included in some of these forecasts in the presentation, was like there was an assumption of over the next 20 years that 36 trillion will grow to over 50 trillion. So that is part of the thinking.
I think there's one caveat or kicker, like key word for all of that, because it's something I've been thinking about more, is recapitalization. The Bitcoin miracle, I think, is right. I think it's recapitalization of productive debt, right? Because unproductive debt, and there's a lot of it, you can throw any kind of Bitcoin in it and doesn't make it, like, I always just anchor back to the crazy whatever Groman throws out. I think it's 2 trillion that was like just effectively like wiped away in the past 20 years in the war in Afghanistan. Like, what's the gross, like, what's the productivity that's going to like, the asset will grow, but if you owe the interest and you have this debt, it's just going to grow alongside it. But if you have businesses, and this ties into like early writers and Tim joining on the advisor side of like this notion of there's going to be a lot of opportunities to infuse Bitcoin into debt structures, but productive, like where there's productive businesses that have that and then can offset it via the BTC sitting for the debt, accumulating it, being lean. But that's the one caveat. It's like you can't just throw Bitcoin in any kind of debt and it just fixes it. You have to have productive businesses. And, you make the case the U.S. will be a productive business.
Yeah. It's interesting too how that would tie into the stated objective then of trying to get interest rates lower. So there's I don't think we talked about it in too much detail yet, but $7 trillion of federal debt maturing over the coming months. And so the US government, if you're operating as a business, you want less expenses, right? So the US government wants less expenses. If they were to refinance that debt, it would be an absurd number given where interest rates are currently. So it's interesting to think about. Trump has said publicly several times now that he wants lower rates. The Federal Reserve likes to position themselves as independent. That's up for debate, but they haven't lowered rates yet. And I think there might only be one or two perhaps that are forecasted this year. But Bitcoin will play a critical role in the recapitalization of America. And so I'll be interested to see what happens over the coming months. Of course, we'll talk about it on the show as well, but the US government wants to get the interest rates down because they have $7 trillion of debt to refinance. Bitbonds potentially plays a role in that, where the rates come down because the Federal Reserve is lowering them, but also maybe because we have the hardest asset that ever existed to back part of that debt as well. And that may bring in new buyers of the debt. So exciting times. I'm curious to see what comes of that.
Yeah, I mean, I think if you extrapolate at all the insatiable demand that we've seen for MSTR bonds, I think there would be a ton of global demand for U.S. issued bit bonds. I think that's a safe assumption.
I would like to buy my first bit bond.
Jackson, you take out a loan yet?
I knew it was going to come up. I haven't yet.
We're at a good price for you.
Market
has given you another gift.
I know. I guess it's time. I just sleep so well right now, and I don't want to not sleep well anymore. But I'm going to figure that out. I'm going to come to the show here pretty soon. I'll have a loan out for everyone to be
Jackson's leverage journey.
Yeah, for TLT entertainment purposes. One thing I wanted to talk about though was the Cantor Fitzgerald announcement of the partnership with Anchorage and Copper. So I don't think there's anything there yet in terms of there's nothing there yet in terms of this business being built yet, but it was at least an announcement to let the market know where Cantor is headed. And so they want to initially commit $2 billion of financing to institutional investors, providing lending to institutional investors that hold Bitcoin and I guess other digital assets as well. And they selected Anchorage Digital and Copper as infrastructure and custody partners. Would be curious to hear what the group's thoughts are just on this move. I know Howard Lutnick's been very vocal as an advocate for Bitcoin. And one other thing to call out as well is on their balance sheet, they have a ton of exposure to MicroStrategy. And I think it's over $1 billion in MicroStrategy shares. But anyways, what do you guys think of Cantor stepping into the ring, making this announcement, their partners, etc.?
It seems like, it's an announcement of, the first steps of a plan, basically. They have concepts of a plan. Because if you remember, Lutnick first announced this idea, almost a year ago now in Nashville at the Bitcoin conference, and we didn't really hear anything about it since then. And so I think this is just a preliminary step to actually put that process and sort of new business line for Cantor into real motion here. But exciting, nevertheless.
Yeah, I think that's actually like a key point to bring up is like these individuals that are at the highest seats of power that are creating the frameworks for this asset class are behind the scenes in their business dealings making very huge moves that we've never seen, right? Like it's always the thing, don't put your money where your mouth is. And ultimately Cantor, there was actually a really telling podcast that he did before, I think it was before the inauguration. I think it was even before the election, where it was very like at the end of this pod, he's just like, yeah, Bitcoin, I have hundreds of millions and it'll soon be billions of dollars. It was just like foretold. And if that's true that they know number goes up, well then naturally number goes up requires trading. You got to have infrastructure around exchanges, and then also is going to require the ability to lend against the asset. And obviously, like, I think stables play a part into that. And so Cantor being an equity holder in Tether, the stablecoin stuff that's coming about, and then also them putting this facility of $1 to $2 billion, setting up where they're going to lend against the asset. It all just makes sense that they're preparing for this emergent kind of like growth in not only the number or the dollar terms of what a Bitcoin costs, but then also the amount of new entrants coming in from institutions all the way to individuals.
Yeah. At the end of the day, it's all about incentives, right? And so everyone is self-interested. And when you have people at the highest level that have material allocations to something, then they're naturally going to make business decisions that will benefit them. I think that's the simplest way to distill any of this.
One thing that we should get when we get an older gentleman on the pod, like somebody that's, been around the block for a while, I'd be curious. I think this is probably true. It's just we're younger, maybe haven't. Maybe you guys can tell me if you know, like, because we're so glued into what's happening at this new administration level and digital assets. Like, has it been seen before where the like arm's length business dealings are happening in like, because I think there's probably a component of social media and it just gets brought to light, and there's the there's the researchers for kind words that are out there sleuthing through the internet to call this stuff out and see it. But I just wonder if this is just an anomaly with this new administration, or this is something that happens every 4 years where different people, they hand off their business dealings and then they kind of know what's coming from a regulatory perspective and they place their chips accordingly.
Yeah. I mean, I don't know for sure, but I do know just, with Wall Street in general, right? You have a position in something and then you go on CNBC and you talk about why it's a great position, or why you want a certain outcome. Like, I think of Bill Ackman in 2020, where he just went on and started crying about what was happening in markets and the economy, but he had like a massive short position on. So I don't think any of this is new. I think just this is how people operate. Everyone's self-interested at the end of the day. There is certainly some distinction between what is legal and what's illegal, but Wall Street will always talk their book.
Well, but I mean, just to take it a step further, it's like Trump's children are literally managing his finances in the same way Howard Lutnick's two boys are managing. It's like you go to dinner like every night or whatever, and it's just like, hey, we're gonna get this thing approved, and I like, is CZ gonna get his part in because I got this investment? Like, it's very interesting. And I've never like really paid attention to all this stuff. So I don't know. There has to be like context where this happens but it just feels so like blatant outright, and nobody's like questioning or apologizing for it. It's just like, it is what it is. We're gonna World of Liberty 5. We're gonna launch, altcoins. We're gonna do the whole thing, and we're gonna have fun.
Liberty 5, whatever it's called, they are down significantly on some of the investments that they made probably a month and a half ago, like into Ethereum and all these other altcoins. I think they're down like 60 to 70% on that portfolio.
Yeah.
It's not like it benefited though.
Not yet.
Not yet.
Speaking of down significantly, I'm not down significantly, but I think I might be on the red on my strategy position. So Tim Kotzman.
Oh no.
I want to hear what the group had to say this week in the MSTR True North. What were you guys talking about with strategy?
Also, secondary question: if your price prediction for Bitcoin is $1 million by the end of 2025, what is MSTR at the end of 2025?
$1 million.
Maybe $2,000-$3,000 a share on MSTR.
Okay.
Everyone was bullish.
Sounds bearish.
Yeah, I mean, it's only a 10x. But yeah, I mean, I'm not glad.
Shouldn't it be a 20x? If it's
yeah, he's saying $30,000 a share by the end of the year. So that's
who is saying that?
Gladiator.
Oh.
All right. Well, yeah.
Yeah, but
how about a serious person, Tim?
Here's the reality. To quote Ryan McGinnis, I was talking earlier about how theoretically Strategy could come out with like $100 billion capital plan. They keep iterating, like that's possible. You have the bit bonds that we were talking about, and I think the example that Andrew put up there was like issuing 200 billion. I mean, you just throw a couple other examples like that in there, whether it's companies, whether it's a country doing bit bonds, before you get to that $1 trillion number. And right now, Bitcoin's only a $2 trillion market cap. I mean, I think that should illustrate how early we are and kind of what's potentially at play over the next couple of quarters.
So Jackson should add to his MSTR position. Is that what you're saying?
Not financial advice. Yes.
I'm just gonna have to get wrecked for the show's purpose. I'm just gonna take out like a massive loan and just dump all my Bitcoin and buy MicroStrategy.
Something like
stats and strats.
Yeah, Tim, I like secretly want Jackson to use as much leverage as possible so he has to work for OnRamp for the rest of his life.
It's not a secret anymore. All right. Where do we go from here? That's the question that everyone wants to know. One thing, Michael, maybe you wanted to discuss was what's going on with Binance. I haven't gotten a chance to look into it much. I think, you were able to dig into it a little bit, but anything you discern from that, or I guess, could you just level set and tell us what it was, and then any thoughts on it?
I mean, I guess like high level, there's just not enough infrastructure in the space, so we see it. I think there's rumors of a lot of M&A happening. There's a lot of public IPOs coming up that are rumored as well. I think BitGo, I think these are public that came out. BitGo, Kraken, and maybe one other firm. Maybe it's Gemini in like targeting Q1 2026. So a lot of appetite to get to the public markets now that this has been de-risked, and then a lot of bets just being made around capital infusements, getting exposure to get close to it, right? The kind of first step in an acquisition sometimes is get exposure, do the diligence, figure out what makes sense, and then acquisition, you're close there. So there was two versions of Binance that came up this past week. There was the GMX investment that we touched on, which is just kind of like global arms race on getting access to these businesses that are going to be, the future infrastructure, frankly. I think we talk about a lot on this pod about, it's this stuff is so like alien when you really break it down, from custody to managing volatility and everything in between, that you're really going to need a native firm to help you and support your traditional business. So there's that aspect. And then there's just rumors swirling around since I think the end of last year that Trump's team was looking at Binance US, and Binance US has been mired in a bunch of like regulatory and just wrapped up in a bunch of red tape because of where CZ was in with him getting, I think it was a 7-month sentence. I don't even actually know if they fully, I should know this, but if they're fully been, like shut down the business or stopped operations. I did talk to somebody from there that was key in helping that business go from like 50 to 500 people. And this is all public, but that they were like top 3 exchange by volume globally in 21. So they're the real deal. But obviously the administration and all the things associated kind of slowed that down with CZ. So Trump was rumored to be talking with them or their team. So I guess it's Trump, rumored to like making some acquisition or investment. And then I guess it came up that also in parallel, and I think they're denying it, but then the Wall Street Journal's like has firsthand reporting that CZ's lobbying to get a part in. And so it just brings up that similar thing, like, well, if you're going to, make the investment, the part in, because I would imagine CZ's still majority shareholder in Binance US. And so it kind of makes sense where like UAE has to go and they put $2 billion in because he can command what he wants. Another sovereign probably wants exposure to that. But then there's strategic relevance of that part of the world. In the same way, Binance US is a segregated entity, and that if Trump's camp wants exposure to that and all the things associated, right? There's not that many exchanges, reputable exchanges. You'd say Coinbase is one of them. Then you may want exposure to that because it's going to be relevant from an acquisition perspective, or just to be a market leader as digital assets become more adopted in the US.
Yeah, I think it's generally positive from the like the competitive perspective of what you're referencing around like Coinbase has largely dominated the US market from an exchange perspective, and Binance had tried at various points to infiltrate the market and really compete, and due to all the red tape and hostility towards them, they weren't really able to do that. So I think from that perspective alone, I see it as a positive sign of let these large crypto native firms compete domestically here, give people more options. That's always better. And so I think it's more signaling than anything, because it's not like Binance needs the money. So it's just various sovereigns getting their hands into the infrastructure, the picks and shovels, as you referenced.
Well, but it reminds me of Cantor's investment in Tether. We all know Tether doesn't need the money, but it's like it's like, I need your blessing to come operate here. And so it's this pay for play style thing. And that's where it goes back to like, how much has that happened before versus now in real time? But either way, it doesn't matter. It's just the economic reality. It's just super fascinating to see that. Tim, I'm curious if you have thoughts on it.
I actually wanted to see if you guys had any reaction to, about an hour ago, the Genius Act stablecoin bill passed out of Senate Banking Committee.
Do you want to share what that bill is, or what? Yeah.
I just know it's the stablecoin bill. That's about all I know. It seems important.
I mean, it seems like that's a priority for them. I think that was the way they've been signaling and posturing. They want to get that done first. And so I would be surprised if that doesn't pass, because it's super blatantly aligned with U.S. interests, spreading dollar dominance, leaning into stablecoins, putting rules of the road and frameworks around what people can do. I mean, I haven't looked at the intricacies of the bill, but that's not surprising to me that that's going to be pushed forward.
We should follow stables more. They're the least interesting, but they're also the most interesting. Like, they're least interesting from an innovation from Bitcoin or the value prop, but they're the most interesting because it's obviously what they're invested in, getting for dollar dominance and all the things. But it's actually super scary when you think about it, because I think what like the middle of the curve will think about digital surveillance is like, we're already surveilled, right? Like, our credit cards and all the things. But the reality is it's all disparate data. Right. So you go to your banks, they don't talk to each other banks unless you get some kind of court order. You have your Visa, you have like all these things, and the data isn't all like compiled and collapsed onto each other. And so think about if you're actually have a playbook for Bitcoin's growth and all the things we just talked about. Well, not only are you going to streamline the liquidity via these stables, but you're going to streamline all the data, all the analysis, all the choke points, all the ways you're going to cut off everything via these stables. So it's actually like, it's going to pump the market, but it's also just going to provide so much more oversight and overreach versus what people. So it's like there's just a dance happening right now that it's bullish, but it's also kind of bearish from an Orwellian perspective, because where all this kind of goes is a lot more technocracy than people are expecting. But that's for a different show.
Find out next week on the last trade.
Well, Jackson, I wanted to throw it to you because there's something else to chat about, which is really elucidating the fact that we are so early, and not from like us as individuals. It's this notion of, if you are active in this space, you're a business professional, whether you want to build or join a firm. I met with banks this past week. There's this notion, we can talk briefly about it, with the OCC kind of rescinding a lot of the like letters that they sent out around custody stables, and one other thing that were just kind of hindering. This is post SAB. This is just like letters that they send that are mean letters, but they effectively keep you from ever doing anything in the space because you got to look over your shoulder. But the problem is that, similarly with banks, and when I want to throw it to you, Jackson, on the RIA front, is both sides are proxies for like this notion of, because the government was always involved and it could be banned, or this notion it could be banned, they just like have not paid attention. They've just always assumed they don't need a strategy, and they've just been caught flat-footed, and they all have no plans or ideas outside of like 0.1% that has just been active, knowing that this has inevitability. And so just curious, like, Jackson, on your side, on the RIA side, like, what have you seen? What's your experience there to help, like, just listeners understand that they really have no plan yet outside of, like, maybe we'll do an ETF, and then I can touch a little bit if it makes sense on the banking side.
Yeah. On the banking side, one thing we can come back to there is just an interesting stat. We'll tie into what we'll discuss is there was about 8,000 commercial banks in the US before the great financial crisis, and now there's about 4,500. So it's like over a 30% decline in commercial banks in less than 2 decades. So that'll tie into the bank discussion. On the RIA side, there's a massive opportunity. So if there are any advisors that work at independent RIAs, that's really where the opportunity is for now. I think the wirehouses are going to be slower to adopt. They have been, certainly with the ETF in the past year. But if you think about Bitcoin and its distribution right now, it's 70% held by individuals. And so these are individuals that in many cases have pretty significant exposures. And Bitcoin right now is about $80,000. That number, 70% held by individuals, will likely decline over time, just as you have nations, states, institutional allocators step in. But I do think by nature of how the asset is currently distributed and also the investor behavior with it as well, where a lot of folks who own Bitcoin are long-term and they don't really want to sell it. We see this all the time with our client base. They want to hold it for generations, which is why inheritance is such a big value prop in the business. But beyond that, what that means then is you have 70% held by individuals. These are people that have couple $100,000, couple million, couple $10 million in Bitcoin, and maybe they haven't engaged with a financial planner or a wealth manager before, but maybe they do, but their financial planner doesn't know anything about Bitcoin. So it's kind of souring the relationship. Since it's becoming a larger portion of their portfolio over time, it's just leading to worse outcomes because the advisor doesn't know how to advise on the allocation. They don't know how to think about it from a trust perspective. And so where this ties into an opportunity and what we're seeing with RIAs is any RIA that is Bitcoin, not even first, but Bitcoin friendly and Bitcoin knowledgeable and can speak to their clients about what the asset class is. How do you think about it from a planning perspective? How does it fit into a portfolio? There's just such a tremendous opportunity here because I could probably count on both my hands, firms that actually have a very defined Bitcoin strategy within the independent RIA space. And there's thousands of firms in the country. So one thing I would point to is if you're working within one of these organizations and we can be a resource just purely on the education side, if we could just talk to people in your firm and explain the asset class, independent of even working with us beyond that, there's an opportunity here for advisors to really lead the charge, for helping people that have material Bitcoin exposures today, but then also being able to really set the stage and pioneer what this will look like within the broader wealth management space. So I think it's incredibly exciting. It's incredibly early as well. It ties back into where we talked a little bit earlier. We're kind of moving from this point of skepticism within traditional finance, within Wall Street, politics, to embracing. We've crossed the chasm at this point, and things are going to move very quickly. So it's just prudent, it's wise to kind of get ahead of it because the opportunity is now. There's probably a window, like we're already seeing this a lot with RAs, but there's still a window of opportunity but that's going to close certainly over the course of probably the next year or two.
Yeah, I think that's one of the biggest themes that we got lulled to sleep by is accepting that centralization is organic or natural and will continue to persist. So whether it's RIAs and aggregation, whether it's banks, you mentioned the 8,500 that exist. The reality is if you probably looked at the AUM of those banks compared to the top four, it's like a Pareto distributed, right? Roughly. When you think about big tech, Magnificent Seven, I was again having a conversation with somebody that works in retail and explaining like their shop now looks like the aggregation of like their shop looks like 7 other shops, but in one, because it's a big box retailer and they ultimately had to, like everyone's gone out of business. So you think there's a section for Radio Shack. Like this aggregation is inorganic. And it just comes down to when you have centralized monetary policy, it will aggregate. But when you have a decentralized money, it will disaggregate. It'll be out to the margins, to the edges. And so what Jackson shared is the individuals hold the vast majority of BTC, at least for the foreseeable future. They will continue to because they're the quickest to make the move to adopt larger and larger positions because it's a single individual. And if that's to be the case, the individual is who you want to cater to, but nobody in this space actually caters to the individuals. And that means you have to build products and services for those. Those individuals are by nature the most sophisticated simply because, again, they still hold the asset. So just by holding it long enough, you're saying that you're educated because you didn't lose it with Binance or FTX, Celsius, et cetera, et cetera. And so that's really the opportunity on the RIA, similar to the banking side, is what the BNYs and the large banks are going to do is try to play the same game of aggregation. They'll make an acquisition, of a BitGo or whoever, and then that aggregation will be like, sub-custodial modeled out to challenger banks. And it'll all look the same, and it'll look like omnibus, and it'll just be a natural way that they traditionally manage assets. But from an RIA or a challenger bank perspective, you can actually offer services that are more aligned with what somebody will actually want for their personal wealth, meaning like segregated wallets on chain, multi-institution custody, the ability to lend, but in a way that is accretive and makes sense for the longevity of holding that asset and not putting it at risk. So I just see this as an insane opportunity, and it's going to be a land grab because ultimately those first RIAs or banks that are able to say, hey, not only do we are saying this isn't a stigmatized asset, it's not radioactive, like we're friendly to it, but then they build best-in-class differentiated products, are going to build, they're future-proofing their business, they're going to be market leaders. But we're still so early in that cause, or that, kind of working through it.
Totally. Well, before we wrap up, is there a single point of failure of the week? I didn't come across one, but I also have been spending a very limited amount of time on Twitter because it's just a cesspool on there.
I have a sad one. So, like, at the end of the day, I guess we'll do, like, what on-ramp provides is peace of mind. That's the ultimate catch line. If you're coming to us, you want peace of mind from getting educated so you protect your wealth all the way to peace of mind that all day long there's different attack vectors in your exposure. And we had a client that I worked with previously. He found us, worked with Jackson, didn't even know he actually had onboarded. Jackson made an introduction and had a good conversation with him about 2 months ago. And he was very jovial, excited to work with us, recognized where we came from, the ethos that underpinned what we did. And so it was a good conversation. And sadly, this past week, we found out that he passed away. And I was looking into his obituary, and it was really sad because he was a brave guy that never told anyone that he had terminal cancer, aggressive terminal cancer, except for his partner. But he came to us a few months ago with the realization that he wanted to have peace of mind, but he also wanted his partner to have peace of mind to be able to find his savings. And it really just underpinned this thing that we talk to individuals about, but when it like hits home, when it happens and then somebody comes and you're able to not only take care of it, but not have another thing to worry about when that happens with the laundry list of other things that you have to deal with when someone passes, is the one that comes to mind that I think is important. It's sad, but it's what we've been talking about. We joke around a lot about the plastic devices and all the other things, but the reality is like, this is people's wealth. This is their livelihoods. This is generational capital for individuals that they've worked their whole lives for. And it's the last thing they want on their mind is to be able to go to sleep. They're going to sleep at night trying to worry about, are they going to be able to pass it? We have a lot of other things to worry about in our lives.
Yeah. Yeah, incredibly sad. Really good guy, but it was well said, Michael. None of us and people listening generally don't have plans for anything to happen, but you just never know. And it really does become about peace of mind at the end of the day. So well said. To finish up on a more positive or a humorous joke, we may or may not see you all next week in the last trade. Do you want any guesses as to why?
I have no idea.
No idea what you're talking about.
Well, if people don't like and subscribe to the podcast, I'm just not going to show up. I'm not going to get out of bed. So what I would like to see is some more people subscribe to the podcast. More people throw us some likes.
Smash that like button.
Whether it's on Spotify, Apple Podcasts. If we're adding value, would go a long way to just show the gratitude if you could do that. Or else I'm just not going to do the show anymore.
And if you comment on YouTube, Jackson will go and respond to each one. And next week, there's a lot of individuals coming into Austin for South by Southwest. So if you're around, shoot us a note. We'll see if we can meet up. We'll be downtown having meetings with folks in town.
All right. Maybe we'll see you next week. Find out.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that OnRamp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.